this is happening at the same time the fiat system is facing headwinds, right? $36 trillion in debt in the US. Every other country is massively in debt with a really crazy debt to GDP ratio. Fiat currencies are failing. So if you look at everything, the entire macroeconomic landscape, you can see that 1 million is actually really conservative for this year.
Yeah.
A 10x is just pretty conservative. I don't know what to call it. It's like a precipice effect, you know? Like you're standing on the edge of the cliff. People are scared because, yeah, we can fall a lot from 100K. And that's why you kind of like hover at that area for a while. Because it's scary looking down. Like, what if we go to 70? And you remember when we had a little dip, everyone was saying, oh, we're going back to 70.
Yeah.
But when things solidify, then you kind of go up. And everyone that was panicking and looking down, looking off that precipice, they've been left behind already. And because the supply is so limited right now and the demand is so high, it's just going to shoot up. And you're going to see that kind of 2017 face melting shock and awe rise in Bitcoin price.
Samson Mow introduces the concept of the precipice effect, where Bitcoin hovers around a psychologically significant price level, such as $100,000, because of investor fear. This fear stems from the possibility of a sharp decline, reminiscent of the volatility seen at past key price points. However, once Bitcoin stabilizes and sentiment shifts, panic sellers are left behind, and Bitcoin embarks on a meteoric rise. According to Mow, Bitcoin's supply-demand imbalance is already leading to an environment primed for a parabolic movement. Akin to the historic 2017 bull run, one of the most intriguing elements of Mow's analysis is the concept of omega candles, massive daily price movements of $100,000 or more. While skeptics may dismiss this as hyperbole, Mow points out that these explosive movements are already occurring in certain Bitcoin trading pairs, particularly against weaker fiat currencies like the Egyptian pound and Turkish lira.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I don't really believe in cycles. I think if you flip a coin 4 times and then you flip it 4 times and you get the same pattern, it's a coincidence. Because each flip is independent. And there are a lot of arguments of why we have cycles, such as it's tied to the halving or it's tied to elections. But again, I believe in phase transitions, step changes. You just go to Bitcoin. And when you go to Bitcoin, there's no cycle. And this is why the power law guys hate me, because they expect it's going to progress in a meaningful way. Whereas my prediction with omega candles and everything is it.
What is an omega candle?
An omega candle is
$100,000 candle
on a day.
And you think that's going to happen sooner rather than later?
It's already happening in other trading pairs.
Oh, that's right.
Egyptian pound, Turkish lira to Bitcoin, they already have omega candles. Yeah, I think we're still early. I mean, until we see Bitcoin...
Does it have 100x in it?
Yeah, well, I mean, how much more to go to dollar sat parity?
Yeah.
Right? But here's the thought exercise. Next time you're stopped at an intersection, at a red light, watch the people crossing on the crosswalk and ask yourself how many of them know about Bitcoin. Probably not many of them, right? And you can test this, like go to a restaurant and say, can I pay in Bitcoin? And, you know, watch them laugh at you. And then you can understand exactly how early you are.
Yeah. Where are we on the S-curve?
Still
early adopter?
Still early adopter. I think they can go for a while and print, because the world seems to takes time to adjust. If you look back at the lockdowns and the pandemic or plandemic, when they shut everything down, the prices didn't jump. It took 2 to 3 years, right? For kind of the normal person to understand, or even anybody in the supply chain to understand what's fully happened. And then you saw the inflation come. So all the money printing, the shutdown of economies, it didn't really kick in until 2 years later almost, right? And I think it's the same. Everything, it takes time for the world to adjust to. they haven't really fully adjusted or understood the impact of the ETFs and central banks being able to gain exposure to the ETFs. We also forgot to talk about the Czech Republic Bank, central bank. They've approved buying now too. So what you're talking about, Nico, is it's like on the cusp. But yeah, they can probably print and buy for some time because the ordinary man in the street is not going to fully understand what's going on. The pot is boiling too slowly for them to realize. If they would have understood the impact, they would have probably bought Bitcoin already just from trying to hedge against inflation alone. Watching hyperbitcoinization unfold, I think it's 5 to 10 years.
5 to 10 years.
5 to 10 years. I don't think fiat can hold out that long. So I mentioned all the tailwinds that we have. This is happening at the same time the fiat system is facing headwinds, right? $36 trillion in debt in the US. Every other country is massively in debt with a really crazy debt to GDP ratio. The fiat currencies are failing. Canadian dollar, I don't know if you're watching it, but it's trading like a shitcoin. As with a lot of other fiat currencies, the yen is dying, right? Last year, there were so many Bank of Japan interventions to push it from 160 down to 150-ish, and it's back now. How much more firepower do they have? And at what point does that stop working completely? In the UK, last year, the pound almost reached parity with the dollar, which is crazy. The government bonds were in crisis. The Bank of England had to intervene. And maybe people are not paying attention now because there's so much other stuff going on. But the government bonds in the UK, the gilts, they are again in crisis. So if you look at everything, the entire macroeconomic landscape, you can see that 1 million is actually really conservative for this year.
Yeah.
A 10x is just pretty conservative. It's sort of part of that transition to a new money. It's an attempt to shore up and strengthen a currency. So you can either do that with gold or anything, but you can also do that with Bitcoin. So you can kind of say, we're going to peg the dollar to Bitcoin now, and the debt is convertible, redeemable from Bitcoin. So 1 sat per dollar.
Mow is highly skeptical of CBDCs, citing their widespread failure in adoption. He points to China's digital yuan, which has struggled to gain traction despite heavy state control, as well as Nigeria's e-naira, which was met with overwhelming resistance. The very need for governments to coerce people into using CBDCs proves their fundamental inferiority compared to Bitcoin. According to Mow, people may not fully understand Bitcoin, but they instinctively reject centralized control over their money.
I think people have kind of overlooked sidechains because they're looking for more shiny, interesting things, more complex things that sound cool. But sidechains are relatively simple, very reliable, and are proven to be a way that we can scale Bitcoin with just what we have now. Zero change to consensus rules. No need to ask devs for permission or to have a civil war or do anything. You just spin up your sidechain. And we have Liquid, which has been running for, getting close to a decade now. And Liquid is not decentralized. It's run by a federation. We can make the blocks bigger. We can ramp it up. We can scale it up, make it more robust. You can have other Liquid federations. And that is a way that right now, today, we can scale Bitcoin to meet the needs. So, Aqua uses Liquid now, but let's say Liquid is packed and full. Maybe there's another Liquid. Maybe El Salvador has a side chain. Maybe the Czech Republic has a side chain. We can support all of these, and we can perform atomic swaps between different side chains. So I don't see any issue with scaling Bitcoin. The question is how you want to scale it, because if you're going for orthodoxy, then you're a big blocker and you say, we need gigamegs, we need terabyte-sized blocks. Good luck. But if you're gonna be pragmatic, use the technology that we have now and meet the demand, we can do all of that already. I don't think they were ever really a threat because people don't want to use them. Every country that's rolled out a CBDC has sort of failed. Even in China, which you would think, yeah, they could pull it off because you can't use VPNs, there's great firewall and whatnot, but no one's using, barely anyone is using the CBDC. And then Nigeria had the e-naira.
It was a total failure.
Total failure.
Yeah.
And they had to actually clamp down and limit ATM withdrawals to force people to use what they initially marketed as a convenience tool and, to help you, to keep you safe. But if it's so good and so safe, why do you need to beat people over the head to use it?
Yeah.
There should be no need for coercion, but you do, because people may not understand Bitcoin, but they're not stupid. They're not going to use something where they can't get out. They're not going to check into their Roach Motel, right? Well, some do, but we call them shitcoiners. But generally people know this is inferior monetary technology. They may not be able to quantify it and describe it, but they know inside. Everything's happened faster and in a much more spectacular way than I imagined. That's why I'm really bullish, because I'm kind of bullish and then my expectations are beat and I try to reset them and then they're beat yet again. But everything's happening so much faster. Like the China ban was a nation state attack. Then you have El Salvador and nation state adoption. The timeline is definitely way faster, right? It's 16 years, and being in it, you kind of lose your perspective. But if you step back a bit and you try to look at it from afar, it's like that's the blink of an eye.
Yeah.
The rapid pace at which we have grown as a community, as an asset class, and as a technology for money. It's just unbelievable. We should be at 200 right now.
Yeah.
Everything under 200 is,
It's bearish.
it's a joke.
So, what are the things that worry you about Bitcoin the most?
I think Bitcoin is pretty solid right now. I don't really have too many worries. If I had to pick one, it would be sometime in the future, we might have something like a block size war or a civil war. And it might be from the traditional finance system, like the legacy finance system. Because if you look at the BlackRock ETF filing, they actually say in there, we get to choose which chain is Bitcoin if there is a split, which is incorrect. And if they amend that, I'll feel better. But until they do, I think that's a risk hanging over our heads. There's a chance that even if that doesn't happen, that Bitcoin can split into two. You have institutional Bitcoin and free Bitcoin. Institutional Bitcoin is just locked up in ETFs, in custodians, and it's not allowed to leave. And we see little snips and glimpses into the future of that, right? In the UK, you can only transfer from one exchange to another exchange, right? Little bits of, Orwellian garbage here and there. But that could really happen. You just have free Bitcoin, which is transacted in Argentina, El Salvador, and everywhere else, and then everything else is locked up in a system and it can't escape.
What can we do as a community to avoid that scenario?
There may be no way to avoid it, but you can protect yourself by keeping your Bitcoin yourself. Anything that's in the system or connected to the system, you have to understand there is some risk.
One of the most concerning risks Mow identifies is the potential bifurcation of Bitcoin into institutional Bitcoin and free Bitcoin. Institutional Bitcoin locked within ETFs and custodial services could become subject to heavy regulation and restrictions. Meanwhile, free Bitcoin, actively transacted in nations like El Salvador and Argentina, would continue to function as peer-to-peer digital cash. He warns that legacy financial institutions may attempt to redefine what constitutes real Bitcoin, potentially leading to another ideological battle within the community. Please like and subscribe.